Hello, everyone. We're from James Cooper Creston, a firm of accountants that undertake R&D tax relief work for many of our clients. My name's Margaret Savoury.
And I'm Tracy Bacon.
And this is the second part of our video. And in this second part, we're going to look at the changes. Previously, and the next slide shows this, we looked at what happened with the current rules. And if you haven't seen this refresher and feel you'd like to refresh, please have a look at that video first.
And then in this part, we are looking at the timeline of recent changes and then going through the key rules that you need to be aware of. Next slide, please.
So this was just what we covered in part one of the video. The basics of the current scheme, which is still in action, the new guidance for compliance, which is issued by HMR3, changes in rates, which are coming as we speak, and talking about specific categories of SMEs. Next slide, please.
So here we have an overview of some things that are already happening and some things that are coming up. On the left-hand side there of the timeline, we've got the changes that we've talked about in part one, the SME and RDEC changes in rates and enhanced expenditure. And then on the 8th of August last year, we had the additional information form, which must be submitted for all claimant companies. And then on the right-hand side, these changes are effective for accounting periods beginning on or after the date referred to there. And we'll be covering those changes in these slides. Next slide, please. And again, we've got an overview slide here, which shows you the current position that we talked about in part one, and then those changes affecting accounting periods beginning on or after the 1st of April 2023. The key change there being the extension to the definition of software, and on or after the 1st of April 2024, where we'll be looking at activities of subcontracted activities and externally provided worker activities where they are performed in the UK. So we'll be covering that in detail as well. Next slide, please.
This is something that came in for accounting periods beginning on or after 1st of April 2023. The need in certain circumstances to notify HMRC in advance that you're going to make an R&D tax relief claim. So it's something to watch out for, especially if you're setting up a new company, because you have to claim within 6 months of the end of the accounting period end. The normal deadline for R&D tax relief is 2 years. So you've still got 2 years to claim, but you have to advance notify through a separate portal within the 6-month deadline. And the two rules there are either if you've never made a claim before or if you've had a gap for a few years. And again, this deadline applies. There we've put a few tips at the bottom. So think about if you have a long period of accounts, because actually you could extend your period and that extends the window out because it's 6 months after the end of the period of account. And just a reminder that it can get very complex. So think about advance notification in advance because that deadline could loom early. The rules can get quite detailed. We wanted to be aware of it. It is a separate portal that you have to notify on. Next slide, please. Now, this is the thing that came in from 8th of August. So all claims now for R&D tax relief have to submit an additional information form, again, via a different portal from your normal tax computation or the advance notification. Lots of detail required in terms of the projects, how much expenditure on each project. And additionally, they want the name of someone, the senior officer at the company. So really ensuring that the company takes ownership of what's gone in the claim. And also, if you've had an R&D agent, a firm of accountants such as ourselves assisting with the form or submitting the form on your behalf, then the name and details of the R&D agent. The most important thing is that it must be submitted before any R&D tax relief claim is made on the corporation tax return. So there is now a box that you tick on the tax return to say, yes, we've submitted this AIF form in advance. So a really important additional bit of form filling that needs to be done for R&D tax relief. Next slide, please.
So now we're going to cover some of the changes, and this change, software and consumables extended definition, is for accounting periods beginning on or after the 1st of April 2023. And this is part of the modernisation of the R&D system, and a welcome change because it brings in additional costs that a company may be able to claim for. As you can see, we've got data licenses there and cloud computing services, and there's some detail of what that covers. There are exclusions from that, though, where broadly there is ability to exploit the data licenses, as you can see from the list at the bottom, but generally a welcome change to be aware of. Next slide, please.
So now we're moving on to some of the changes that they announced and thought they were originally going to come in for accounting periods on or after 1 April 23, and they deferred it for a year, but they haven't deferred it anymore, so it comes in for accounting periods beginning on or after 1 of April 2024. This is all making sure that the R&D is tax relief is related to activities performed in the UK only, or honorary UK activities, for want of better words, so what they call qualifying activities. And so it's when you have externally provided workers or subcontract activities, and that can either be to fellow group companies, connected companies, or an independent third party. So what are the detailed rules? Next slide, please. So the activity or work must be undertaken in the UK, or it must be considered to be qualifying overseas expenditure. And HMRC recently, in February 2024, issued some draft guidance on looking at what this sort of thing means. And one of the things they said about looking to see whether the activity is undertaken in the UK is the company needs to take reasonable care as to where the R&D activity takes place. So you might have to check with your suppliers where the activity is being done. If it's overseas, we've got very restricted circumstances where you may be able to bring it in. And what the rules are is says that it includes, looks at various conditions, and it says these are conditions which are either geographical, environmental, or social. So think location of the mountain, the volcano, or whatever, or legal or regulatory requirements. So maybe NICE approval or FDA approval. And one of the things they've specifically said in the legislation that you can't say, I'm doing it overseas because it's cheaper overseas, or there's no one that can do it in the UK. If we look at these conditions in more depth, next slide, please. They have to be related to the trade, and it says conditions necessary for R&D are not present in the UK, and they're present in the location in which the R&D is undertaken, and it would be wholly unreasonable for the company to replicate it in the UK. So maybe it's because there's this own piece of equipment that only exists somewhere else in the world. I'm thinking of CERN maybe, or something like that. So it would be unreasonable for us to build and plant similar in the UK. This is hugely complex. You will need to think about how you are going to document this. In terms of the conditions as well, we've got to think about the geographical, which might be the volcano only exists in the country, not in the UK, or it might be that I need to do, for example, clinical trials, and the FDA requires it to be done in the US, for example. So if you do have overseas expenditure, it will be necessary for you to document why you consider it satisfies all the conditions. And the HMRC guidance has now some 31 examples of different scenarios where it may or may not satisfy the conditions if you're undertaking overseas expenditure. So it is about things that can get quite complex. And as we say there's a few tips. Think about what you say in your contract when renewing contracts. And although this only comes in for accounting periods beginning on or after 1 April 2024, you may be renewing contracts now. Also think about consumables versus subcontracted activities. If you've got a consumable, which is things that you buy in to use or consume as part of your R&D, those don't have the restriction to geographical location or where they are manufactured. Next slide, please. Similar rules also apply to externally provided workers. It's about keeping things or the activity in the UK. And for externally provided workers, the metric for that really is, do they pay UK taxes? So as long as they're paying UK taxes, which relates to the trade, it's similar conditions in terms of where an exemption might apply. So again, it's thinking about the contracts that you're currently undertaking. Would it be excluded from the R&D tax relief claim, or is it UK, or is it something that we would fit into the exemption?
So now we're going to have a look at the schemes in place for accounting periods beginning on or after the 1st of April 2024. So we've got the loss-making R&D intensive SME scheme. This is very familiar. We've got the 86% uplift, the ability to surrender losses, because obviously this relates to loss-making SMEs, at 14.5% as we do currently. There is still the SME cap in place and the cap exemption. And just as a reminder, you'll be exempt, or a company will be exempt from the cap if conditions A and conditions B are met, where condition A is where a company actively manages its IP. Condition B is where less than 15% of the subcontracted activity is to a connected party. The intensity required for a company to be within this scheme is that currently it'll be 40% of the company's expenditure is in relation to qualifying R&D, and that is changing to 30%. So more companies hopefully will come into the scheme when that percentage reduces. There will be a 1-year grace where perhaps a company fluctuates with those rates, where perhaps they have a one-off cost or something like that, which would make them fall below that intensity threshold. So that a company has more chance of staying within that scheme. There's also, next slide please. There is also the merged scheme. This is very much like the RDEC scheme that we currently have in place. So the credit arising, as you can see there, is 20% above the line. That is to say that the qualifying expenditure at 20% will be shown as other income in your financial statements. Changes have been made to the RDEC scheme rules, though, to accommodate the merged scheme, where the cap applied to the scheme is brought in line with the loss-making R&D intensive SME scheme. You can see there that that's £20,000 plus 3 times the total PAYE and NI costs. And the cap exemption that we've just talked about will also apply to that scheme. Because of the change and rules in the RDEC scheme and the change over to the merged scheme, it's necessitated a change to the subcontracted activity rules, which we're just going to have a brief look at on the next slide.
Yes, and this is probably the area that's going to cause most headaches and most discussions amongst yourself in the company or with your advisors. So it is going to be change for all, I think. And the basic simple way of looking at it is there's going to be tax relief. The R&D tax relief claim will go to the person in the chain who is ultimately the top of the chain, ultimately requires the R&D to be undertaken. So we're calling it the customer there. So I'm sitting at the top of the chain. I'm running the R&D program. I haven't got the in-house resource, so I subcontract it out to another company. I own the R&D, so it's me that gets it, regardless of whether I'm formally an RDEC or an SME. I will be the one that claims relief. So this will have implications for people, particularly SMEs, perhaps, who've historically done R&D on behalf of a larger company and have been able to claim onto the RDEC scheme. That perhaps will go. So the key thing is to look at your contracts and work out, am I doing subcontracted work for someone else? In which case, I might not be able to make an R&D tax relief claim in respect of that work. Or if I'm the owner of the R&D project and I'm subcontracting out, maybe I will be able to claim where previously I haven't. There are some exemptions, I'll mention those in a moment. In terms of specific requirements, and this is in the draft guidance and some explanatory notes in the Finance Act, the Revenue have stated there must be a contract and eligible R&D activities must be undertaken. And they've said as going as far as, and this was in the explanatory notes, there must be looking around the wider contract. If the contracts are unsure, they should clarify as part of the negotiation process, and adds, if the position at the time, it's the time the contract is made. So again, although this might be for the future, you might be thinking of entering into contracts now. So this is something to be hugely aware of, because it may affect whether you can or cannot make a claim. Another really important point is there might be circumstances where if you are doing R&D for someone else, you might be able to claim. And that's when you look up the chain and maybe they're what's called an ineligible company. That might be they're outside the scope of UK tax for whatever the reason. They're an overseas company, or they might be in the list of ineligible people like research institutions. So something to check, and I'm afraid it will be on a contract by contract basis. So potentially there's a lot of work to do in terms of reviewing all your contracts.
Next slide, please. So just a few bits and pieces to finish for today, just some things to be aware of. As you can see there, the definition of R&D now includes pure maths. HMRC are given the powers to reject an R&D tax relief claim, so they can actually remove the claim from your submission. The payment condition has been confirmed, and that is to say that any amount included in your qualifying expenditure must be paid by the time the R&D claim is submitted. Something new that I don't think we've talked about before is that HMRC, or the ability to nominate another party to receive the R&D tax credit, is to be removed. So it will only go back to the claimant company. And as you can see, there's a draft guidance in place regarding subcontracting and overseas, which was issued on the 9th of February. And there may be some more information, detailed information, that we will provide for you in the coming weeks and months. So I think that concludes for us today.
Yes, thank you very much for accompanying us on our whistle-stop tour of the changes that are taking place in R&D tax relief. There is an awful lot going on, and this can only touch at the surface, give you a few ideas, give you food for thought as to what you must start looking at and thinking about. Please come and have a chat with us if there's anything that you think in your particular circumstance with your particular company that you would like to know more about. But there is a lot to consider. We hope this has been useful for you. So thank you very much for listening.
Thank you.